Hey there, everyone. Are you curious about Delaware Statutory Trusts? Well, you're in the right place. Today, I'm joined by Bryson Blackwell of Waypoint 1031 Investments to tell us more.
Thanks for having me here today. Looking forward to chatting.
Absolutely. Thanks for joining us. First off, what exactly is a Delaware Statutory Trust, and how do they relate to 1031 exchanges?
Yeah, so a DST is a separate legal entity that is formed by a sponsor for the sole purpose of owning and operating a piece of real estate. And with the DST, you'll find many assets within it, typically, apartment complexes, self-storage facilities, retail, and different asset classes like that. And investors can invest their capital into a DST and own fractional ownership or beneficial interest within that DST and participate in the performance of that asset. And what makes it unique in a 1031 is that the beneficial interest can actually be used as a like-kind replacement option for a 1031 exchange. So it's become a very popular solution for investors that are seeking commercial assets that are passive and needing to complete a 1031 exchange.
That sounds really interesting. So, in your opinion, what makes a DST an investment option that's worth considering?
Yeah, so DSTs are going to be a popular option for investors that are seeking more of a passive investment, right? Going back to having that hands-off experience. Because the sponsor is the one that's forming and creating the DST, they're also responsible for the property management, the acquisition, any financing that's going to be in place, they're going to set it. So they handle the day-to-day operation as the investors are completely hands-off. Outside of that, you get access to various different markets, asset classes, and things alike. So we're able to diversify portfolios very efficiently and spread out the risk. Another key benefit that we recognize is the debt that's associated with any DST is non-recourse to the investors. So investors that have debt they need to replace in a 1031 exchange are able to do that in a really efficient way through DST investment. And being non-recourse to the investor essentially means that investors are not going to have to personally sign off on that debt. They're not personally liable for it. It's all at the sponsor's level. So it's a really efficient way to offset any debt obligation in a 1031. And lastly, being that there is a pretty strict time frame and rules that you need to follow in a 1031 exchange, this is a very quick and efficient way to invest in real estate and bypass and mitigate some of those time constraints in a 1031, right? In a 1031, you have 45 days to identify. That could be a challenge depending on what you're looking for or what market you may be in. And so with the DST, we're able to identify and close investments within a 3 to 5 day window. So it's very efficient.
That sounds like a great option to consider. Another common question is, how long do people typically hold a DST before they ultimately end up selling it?
Yeah, so DSTs are typically held from a 5 to 7 year window. They can be held for a total of 10 years. It just depends on each offering. But we usually tell our investors it's an illiquid investment and you can expect to have it held for the next 5 to 7 years.
Excellent. That's great to know. How many investors are typically in each DST?
Yeah, so a DST can have up to 499 investors, which makes it very flexible in terms of the minimum investment that we can charge to each investor. So that minimum investment is anywhere from $50,000 to $100,000, which makes it easier to make an efficient portfolio that is diversified. But I've seen some DSTs that have brought on 50 investors. I've seen some DSTs that have brought on, up to 250 investors or more. Just depends on the size of the offering, how much equity they're looking to raise. And another thing I'd like to note is that you keep in mind the investors that do go into these offerings, given there's, a good handful of them that are going in, they are all truly passive. The management duties at the sponsor level, so there's no need to anonymously vote amongst each investor on how the operation will be ran.
That's all excellent to know. Finally, who would be a good candidate for DSTs?
Yeah, so in order to invest in a DST, you have to be an accredited investor. Being an accredited investor essentially means that you have a net worth of $1 million, excluding your primary residence, or you reach a certain income level of $200,000 as an individual and made that the last 2 years and expect to make that this following year, or $300,000 if you're married. So once we have accredited somebody and have identified them as accredited investors, they are now allowed and capable of investing into a DST. And the usual candidates that we work with and find to be a good fit for DST investment are investors that are looking for, again, that passive investment. So a lot of the investors we have are older individuals that have owned property for many years and are coming to us asking for a solution of, okay, I have this property that I have a lot of equity in. How do I sell it, liquidate it, keep it tax efficient, but still and go into an investment that doesn't require us to personally manage it or have that hands-on experience. So it's usually the older demographic that is attracted to this sort of solution. But other than that, it's just having investors that want access to commercial real estate and are looking for efficient ways to get into that segue.
That all makes sense.
Yeah.
Well, thanks so much for those insights today, Bryson.
Thank you for having me.
Of course. And there you have it, a brief overview of Delaware Statutory Trusts. If you have more questions or want to explore this investment option further, consult with a financial professional such as Bryson. Happy investing out there.